Credit Suisse pays as much as redeem AT1 bond, sends message to the marketplace, refiles to add missing letter in AT1 bond. In headline, no different changes to textual content. London scandal hit lender Credit Suisse has opted to faucet traders for a pricier dollar bond for you to pay off a $1.5 billion capital boosting difficulty, a measure traders say changed into vital to keep away from elevating issue over its potential to pay debt. Credit Suisse's bond problem raised $1.65 billion at a 9.75% interest charge, according to an IFR pricing sheet on Friday. A source familiar with the problem showed the details too. The bond bought this week, just like the one it refinances, is a so-called additional Tier 1 issue, a kind of contingent convertible (COCO) bond. Deemed to be the maximum unstable debt banks can trouble, COCOs are designed to be perpetual in nature, though banks can pay off them after a particular duration. It is popular exercise for banks to redeem or name AT1 gadgets at the first opportunity. However, past exceptions, significantly Deutsche Bank (ETR, DBKGN) in 2020, mean Credit Suisse may want to have executed the same, as opposed to opting to problem every other bond at a higher fee. Its new bond can pay 9.75%, considerably above the 7.125% hobby rate at the previous high-trigger convertible problem. Some investors stated, but, that selecting no longer to redeem the bond risked elevating concerns that the financial institution might be unable to repay debt as it weathers a turbulent length. The function that CS has been within the headlines during the last year or 18 months, they possibly could not find the money for this to go incorrect, Dylan Lancaster, portfolio manager at 24 Asset Management, said. I assume the first choice turned into to do it, and I think that is an excellent one made via control in terms of being bondholder friendly. And the second turned into having the ability to do it, to get the book for the new deal to refinance the old deal. Lancaster estimated that had the authentic bond no longer been called, its coupon might have reset at round 8.55%, which means the new deal value Credit Suisse roughly 120 basis factors extra than sticking with the vintage one. Devised in the wake of the 2008 economic disaster, AT1 securities' intention to strengthen a bank's capital buffers and aim to ensure that buyers, in place of taxpayers, would be on the hook if a financial institution bumped into financial difficulties. But at the same time as a bank can opt now not to call the bond, Deutsche Bank's 2020 choice no longer to redeem its $1.25 billion in AT1 bonds sparked marketplace turmoil. It accompanied a similar pass in 2019 by means of Santander, BME, San. Filippo Alaati, head of financials at Federated Hermes NYSE, FHI, Limited, welcomed the selection to redeem the debt calling, announcing, it allows Credit Suisse credit score spreads to be perceived as a terrific corporate citizen. Credit Suisse stocks closed 2% better on Friday following the information, whilst rival UBS stocks were down. Credit Suisse also stated that redeeming the tremendous devices helped it to simplify its AT1 capital portfolio. All its AT1 bonds will now be dependent to be written off need to capital fall under a positive threshold, as opposed to being converted into equity, as changed into case with the bond now being redeemed. Some argue too that borrowing costs are in all likelihood to increase in coming months as imperative banks enhance interest prices. Finally, for the bank battered via a string of scandals and profit hits, the new issuance was an opportunity to send a message to the market, one man or woman familiar with the scenario informed. That Credit Suisse can enhance an AT1 for size, and get buyers buying Credit Suisse paper.